Welcome to The Explainer. So, today we're staring right into the heart of the crypto crossroads. What happens when a massive market crash and just absolute panic run headfirst into the long-term vision for the future of finance? Yeah, that's what we're breaking down.
All right, so here's how we're going to tackle this. First, we'll get a feel for the market-wide fear that's going on. Then we're going to zoom right in on XRP, which is kind of ground zero for all of this. After that, we'll pull back and look at this clash between today's price and tomorrow's potential, check out the roadblocks, and end with a really big question. What is value, anyway?
All right, let's start with the big picture. The whole digital asset market has just been hammered by this massive downturn. We're talking about a huge amount of value just gone. And the mood? It's flipped from hopeful to pure panic, seemingly overnight.
And if you want to see that in numbers, wow! The total value of the crypto market dropped to $2.27 trillion. Now that's a 7.7% drop, but get this, it was down from a peak of over $4.2 trillion. That's a staggering amount of wealth that just evaporated.
And yeah, this wasn't isolated. Pretty much no one was safe. I mean, just look at the big three. In 1 week, you've got Bitcoin down 15%, XRP taking a 20% hit, and Ethereum got walloped, down a whopping 30%.
So what does all this selling lead to? Well, it plunged the market into a state that experts literally call extreme fear. And that's not just, a gut feeling. It's an actual measurable metric that tells us everyone is basically hitting the panic button at the same time. And here's that measurement I was talking about. You're looking at the score from the Crypto Fear and Greed Index. It's a key indicator, and it clocked in at just 11. 11 out of 100. A number that low, well, it's screaming that investors are terrified and just want out, selling pretty much everything.
Okay, so with that backdrop of fear, let's zoom in a bit. We're going to focus on XRP because it really found itself right in the eye of this storm, kind of leading the pack on the way down.
Get this, in just one day, a single 24-hour window, XRP was the biggest loser among the top 100 cryptos. And its price didn't just dip, it absolutely cratered, dropping by an incredible 24%.
Now, volatility like that isn't just numbers on a screen. It has real, painful consequences. It triggered what are called liquidations, wiping out $47 million in XRP derivative contracts. Just poof. If you're not familiar, a liquidation is basically when the market forces a trader to close their position because their bet went south so fast. It's pretty much a game over screen for their trade.
And this chart, this really tells the story of how fast the floor fell out. Of that $47 million in liquidations, a staggering $44 million belonged to traders who were betting the price would go up. They were completely wiped out. It just goes to show you how quickly the tide can turn in this market.
And listen, it wasn't just the little guys getting hurt. The big players felt this too. Take a look at this quote. There's a treasury firm called Evernorth, and they hold a ton of XRP. Well, on paper, the value of their holdings dropped by almost $500 million. $500 million. That's a serious hit. So with all this doom and gloom, all this extreme fear, it really makes you stop and ask a fundamental question, right? In a market that's this wild, how are you even supposed to figure out what something is worth?
So here's the thing. Do we look at these crazy price charts with these huge drops in liquidations and say, okay, that's it, case closed? Or is there maybe another way to look at all this? Is there a different story here?
Well, it turns out you can really look at this whole situation through two completely different lenses. On one side, you have the short-term view. That's all about fear, looking at the daily charts, the crazy volatility. But then there's the long-term view, which is all about the fundamentals. Is this thing actually useful? Are people adopting it? What about partnerships? Is anyone really using it?
Okay, so let's put on that second pair of glasses and explore that long-term view. We're going to try and ignore the panic for a second and actually look at the case being made for something like XRP down the road. This is a vision that's built on real-world use cases, not the chaos we see on the price charts every day.
So, the analysts who are looking past all this daily drama say that for something like XRP to really grow, a few key things have to happen. It's a process. First, you need more people actually using it, growing that transaction volume. Second, you've got to get some clear rules from regulators so the big institutions feel safe. Third, it needs to get integrated into the banking system to really go mainstream. And finally, the tech just has to work, period. See, it's all about utility, not just hype.
So what could happen if those dominoes start to fall in the right way?
Well, some analysts have actually built models to project a range of future values. Now, this isn't a crystal ball, right? It's a forecast based on adoption. You can see a few different scenarios here, from conservative to optimistic. And that optimistic one, the one that points to a $5 price tag by 2030, that's based on the idea of XRP capturing even a small piece of the absolutely enormous global payments market. It's a vision where value comes directly from what it does.
But of course, it's never that simple, is it? A rosy long-term forecast is one thing, but the road to get there is packed with hurdles. So to be fair, we have to look at the very real risks and challenges too.
And yeah, these challenges are no joke. You've got intense competition from all sides. Other crypto projects like Stellar and the big established systems like Swift. Then there's the ever-present threat of regulators changing the rules of the game. What if a better technology comes along? And of course, there's always the risk of another brutal multi-year crypto winter that just freezes everything.
Which brings us right back to where we started, to the central conflict of this whole thing. It's this tug-of-war between the raw panic we're seeing in the market right now and the long-term promise of what this technology could become.
On one side of that rope, you have the hard reality of today's market. As this quote says, people are reducing risk. Why? Because fear and volatility are in the driver's seat, and the main goal is just to not get wiped out.
But on the other side of the rope, you have this fundamental argument. This camp says, hey, ignore the short-term noise. They believe real value isn't about today's price swings. It's about tangible things you can measure over time, like actual usage, new partnerships, and clear regulations.
So, that's the question we'll leave you with, and it's really the essential question for anyone trying to make sense of the space. When you're looking at a brand new technology, where do you find its true value? Is it in the panic of today or the promise of tomorrow?